Hello traders, good morning, good afternoon, good evening. How are you today? Please give me some okay if you can hear me and you can see my screen. Wonderful. Thank you very much, guys. So let's begin. I'm very good, Fanny. Thank you very much. Let's begin, guys. We have several updates to go over for today of the follow-ups that we have. So let's begin. This is according to our report, of course. This one, right? So let's start. Let's go and see what do we have here. The first one, dollar yen. Now, dollar yen, not surprisingly, yesterday with the drop down, I got million questions. Is that time to sell? This right here, boom. That was right after the LTR yesterday. The move down happened. And what did we say about this exactly yesterday, guys? And this is basically what you experience live, right? When you deal with the charts, that's how the market get you seduced. That's how the market get you excited. Well, if you allow it, of course, right? What do we say about that conditions always? That's traps. Yes, they look excited. Yes, they look like, oh my God, I just entered a sale and I grabbed 50 pips or 60 pips. Good. Good. That's very possible, definitely. It was an attack based on some cycle level, so some lucky strikes could work out, could pay. No one says no, right? That's where scalping comes in. Is that a smart technical based entry? The answer is no. This is exactly the shaking that the market is doing. Majority of traders enter with such trendline breakout or such trendline breakout, things like that, or now getting and saying, oh, now we have lower lows, which we don't. It's time to go and sell pending orders here. The answer is trade facts. Do not trade rumors, expectations, beliefs, wishes, dreams, needs, and so on. The fact is there is nothing happening here. This is a buy opportunity with, well, for those who trade price action, and not a sell. So never ever rush into the situation. You don't believe, Costas, how many sell in that situation? Well, you have all the rights for that. The market is doing these traps in purpose, and that's what I want you always to remember and to understand. In order to be able to trade the 1 hour chart or the 15 minutes, you must have the okay to go on the higher time frame. If you don't, you are simply relying on the luck, right? Simply relying on the luck. And I show you that as first thing today because of that exactly. That was ultra exciting. It was like, oh my God, that's all, game is over, right? Especially when we were waiting the 109, 110 zone. But do we have facts for a stop? No, we don't. And that's why I want you to remember that. So what do we have right now on that situation at that moment? Daily is still creating the bearish hidden divergence. The levels are still amazing for us. The levels are still amazing for us. Right here, right on the 50-38 too. But what we need to have in order to trade, to be able to trade, is 4 hour chart confirmation with us, right? Before we go to the lower time frames. And for our chart now and only now, building for us a divergence. So we need this high to set, we need it to form and create, and once we have it, we can say that, okay, we got it. Could be triple ascending, it could turn to be a special cycle to this area, right? With a divergence to form, and then, and only then, we can go to the 1 hour chart and start looking for the false breaks, which we have one here, and the second one possibly to form here or higher. After that, we are looking for the lower lows, or at least for the last available trend line to be broken, and start looking to sell retraces. Make sense, guys? Is that clear? That's what I wanted basically to start with, and to show again, the more advanced guys of you, those who already saw some traps in their lives, should not ever fall into that. But sometimes we still find a reason to fall into these conditions, and that's why it's very important for me to show you these conditions, so you know to recognize them when you deal with them. And as for now, it's doing exactly what was expected clearance. We talked about it yesterday in the live room. Expect this, and this is what is happening. I wanted you to see that live, and I wanted you to experience this live. That's all. So get ready, watch that out happening. As for now, it is still bullish. Nothing changed, nothing. It is still bullish. The only thing that starts to be created is the combination of the 4 hour chart with the daily, which then will allow us to drop to the 1 hour chart, not before. Okay? Any questions about this situation? Oi. Do you see my screen is gone, right? What did I do? Now it should be back. Let's do a test. Yes, now that's back. Okay. Okay, the next one is the Aussie versus the Kiwi, a pair that we are long and we plan to stay long for a while, right? We discussed about that. Now, as I explained yesterday, these are our critical levels. So just change the platform and the numbers are different. The colors are different here. Okay, so we are running here, we are dancing around the first critical area. This is the 161.8 for us, and exactly as we planned yesterday, the 107 or 108, which should be here, clearance above this area, would be the levels where we're going to experience the correction. We are building here, and it's clear now, a triple or a special cycle. And I say or because currently we do not yet have any reversal signs. Right? In order for that to stop and reverse, what should happen? On the lower time frames, we should get false breaks. We should get some trendline breakouts or things like that, right? And it's currently building up potentially, right? So we should see if we get it, some false breaks here, some trendline breakouts and hold, and then we can get out. As long as it didn't happen, there is no real reason to get out, right? That would be the first term target, the short term first short term target. Then we are heading towards the 50% of this possible triple, as you remember, and that takes us towards, well, closer to 109. Okay, so that's all. Basically, no changes for us on the Aussie Kiwi. Long term, we are bullish. Short term, soon, or from here, or slightly higher, we're gonna experience the move down, the correction down. It's most likely to begin soon. It does not have yet any signs. Yes, it's building a divergence. So what? So what? Divergence could, as we know, could go and dance like this before it makes the impact, right? The divergence basically is just a hint for us that the buyers starting to cash out. Where exactly the reversal comes in, this is exactly where we have our signs for, right? We have the false breaks, we have the lower lows, and false break could be horizontal or alternative trend line. Remember that. And that should happen on the 161.8 or the 261.8, which is, let's edit. Okay, or the 261.8 if it will take us into the special cycle here. Okay, that's all for the Oza Kiwi. So for all those of you who are involved, and I want to remind you, we got one here on the Monday breakout. This is basically, that's the management. Okay, it's nothing different. It's going, and it's going beautifully. Enjoy. The next one on the list of updates that we have, well, euro dollar and a pound dollar are remaining bearish, no unchanged, right? For the pound dollar though, this is, and a quick reminder, right? This is a critical area that could cause some reversals for us, and they could start any moment. They could start for double bottom, they could start with one more spike down. So we have to be careful with this situation. But the idea here is still sell the rallies. We are heading and aiming the bottom of the range at least, and then very likely 136, 134, 132. That's the levels that we deal with. The euro dollar is continuing its move down, and it looks like, and again it's early to say anything, but it looks like it's trying and attempting to make the breakout. Will that work out or not? We will know only soon, because look at the 4-hour chart. You see what the market is doing here, guys? Building up a possible trap again, right? Weekly and daily still bearish. So that could be a trap, like a little bounce and continuation, or early jumpers, little one candle move and continuation. So that's why I say we have to see if we manage to hold here, or are we about to reverse here. The way it looks in terms of candles, each candle by far, despite the green one, creating lower highs, lower lows. That's a very good momentum sign, despite the green, right? Because normally when the reversal comes, you can see some kind of false breaks and inner candles, inner close. Here you have lower highs, lower lows. That's a very, very serious sign despite of the color, right? That's why I suspect that, and expect, not just suspect, also expect to continue. We have our targets 120 and then 118, 117 area free to go, and this is our sell going on from the previous week right here with this breakout. And for short term, this is our invalidation, right? That's the last lower highs we have in terms of the trend line. We have this channel, so it has a room. It has a room. Good. So that's a quick update. We are holding that. We are going there. Euro pound is approaching to the interesting zone. It's still holding two candles, as you can see on the 4-hour chart. Now it's making kind of a flag, bullish hidden divergence, right? Now, since this is against the weekly bearish plan, and if we want to enjoy the longs, what do? Double confirmations, right? So once we get the breakout, double confirmation is the right thing to do here. Breakout, retrace on lower time frames. It could be two waves down. It could be bullish hidden divergence with an ongoing trend, and then jump in. Remember, when you go against higher time frames for your own account safety, apply the rule of two confirmations, double confirmation. and of course keep lower risk. Just for you, the double confirmations basically does what? Save you from wrong actions. Okay, it saves you from wrong actions. Very, very, very important. Costas asking what is pound franc. Okay, I was looking at the first one, FBP. Pound franc. Let's take a look. What do we have here? Pound franc. We are for sales. We are looking for the double wave correction, right? 1, 2, 3. This is our first and the most important trend. I know divergence there, so we don't really. Well, there is divergence. Sorry, bearish hidden. There is divergence here. This is the real trend line to break it, and the last two candles are in play only here. Yep, here we go. We get it, right? And the second confirmation, that's what we require because we are still against the weekly. Weekly has no confirmation for us. 4 hour has no triple cycle, no two waves, right? So we are playing, no three waves, sorry. We are playing here with the 1 hour chart, still against the weekly, double confirmation. Let the breakout happen. Let it give you the confirmation, and we are free to go. Yep, we have it. We trade it. Totally agree. This is a very good one. Pound yen. Let's check the pound yen. Actually, pound yen I didn't check on the morning because I'm not interested in this trade, and I'm not sure why you are wasting your energies on it. Pound yen, one straight move, no two candles. Oh, there is, I think. Yep, there is. It did break out. Yeah, this one looks good now. Get the second high and look for double confirmation again. So what's the question here? This one, double top. And where is your trend line here? That's not a low, that's one candle low. Which trend line you use? This one? This one is not correct, it's one candle low. This one not correct, you have no two candles here nowhere. So only the big one, the answer is no, there is nothing. Here there is nothing. I don't see anything here. But my question, I saw also many guys interested in the pound yen. Really, I try to understand why. Really, I'm just curious why. Don't we have better things to follow? Why to go for something that has nothing on the daily, has nothing on the 4 hour? The weekly is bullish hidden divergence. The daily is bearish hidden divergence. And the 4 hour is one move. I don't know. Okay, I might be the one that is wrong here, of course, but why? Why to waste time and energies on something that has simply no synchronization between any of the time frames? Everything here shows something different at any given moment. You understand that in such situations, it's easier and easiest way to fall into traps because big money is not playing this pair. That's as simple as that. I don't know. That's my point of view. Yes, I agree with the sells at that moment as long as this one hold. I agree with looking for sells on the very short-term trading. Of course, small risk, but currently it's one move, no trend line. Breakout. I don't know. It's from my point of view, it's early. If you have this one, then you got your breakout. Yes, definitely can start looking for the sales, but right now, I don't know. Like again, I might be wrong here, of course, but these are not the conditions to deal with. I think we have much better pairs. much clearer. Okay, let's continue, guys. The next update that we have on the list is the euro versus the yen, and as we explained yesterday, after the break of this range, and it was here, right? We are good to go after the retraces. We are good to go all the way up to 134, 134.50, as long, and this is very, very important because few questions arise, as long as the big trend line, this one, hold. Okay? So very, very important thing here also to remember. It is good to go as long as the trend line holds. We expect it up to this area. From there, because of the 161.8 of the correction, we would be expecting that to make it happen. So euro yen on a follow-up list as well. Euro CAD approaching to our corrective area, very, very close to the 38 to 50. Okay, we want to see it here, and we will want to start looking for the sell conditions. Okay, we have this cycle taking us to the same zone, right? This is the first zone, this is the second zone of the magnets with the 38 to 50, and once we are inside, we can start looking for the continuation for sells. Okay, is this good? Well, from my point of view, is this one is one of the favorite. It's as long as the daily holds, I think it's the one of the best to look for sell setups. Again, only my point of view. The best scenario will be, of course, if the daily could complete for us a bearish hidden divergence. Okay, I think it will be the best case. Anyway, for our chart, did not give us any trendline breakout, any lower lows, anything as for now. By ideal, it should clean this high. By ideal, it should clean this high and make the continuation. Why this high? Because that's where many stop losses are placed and located for early sellers. All those who don't have the patience to wait and jump in right here or any other opportunity, place the stop losses above the last high. That's the basic school, right? It's a mistake because these levels are cleaned on most of the times. So that's why I say if we clean that, it gives you simply amazing confirmation for the bearish continuation after that. Remember, the pro money, professional money, makes the move after the not professional money give up. Because you can imagine how many sellers were here and here and here and here and here. You can imagine how many tried to get in early, before the right time comes, right? You can imagine yourself, or think about the past, how many times you would do it in the past. Not on the bad view, of course, because that's what everyone does at the beginning, before you understand how the money really works. And that's what the professional money does after the early entries cleared, the way is free to go, and that will be the best continuation. Anyway, as for now, we don't have any breakout, any sell confirmed, triggered. So on the short term, we can still experience the short-term rallies, and the long term, we are after sells. Euro Aussie still holding, nothing really coming. The divergence is getting more and more extreme. Look at that, and here we are building up a possible double top. Oh, the idea is still remains the same. No, we do not, and I repeat, we do not have any sell triggered yet. It will after we go below trend lines. The big one would give the long-term confirmation. The short one will allow us at least look at double confirmations cells, right? So let's assume we got a breakout, 1, 2, another breakout. That will allow us the short-term playing. Okay, but the way it is behaving, that's the triple. 1, 2, 3, 1, 2. Okay, the 161.8 level of the correction takes us towards the double top exactly. So I would not be surprised even if we get here another false break before a drop down. The levels still remain critical. We are on top of the weekly range. We prepared the possible zone of retrace by cleaning the last two candles low. It was broken. That's where the bearish appearance starts to be in play. Daily chart had the false breaks for us and might go and create now another one. It could be any combination of the horizontal or trend lines, and that's why this pair still remained for long-term preferred directions to look for sells. It's safer, much safer than for long-term buys in that combination of the price action. The next one on the list, pound versus the Canadian. Also another pair that is approaching to the important zone. We are next to the 38.2. This is our action area. That's where we will want to see that and make the move. I want to remind you, we had two false breaks on the bottom, so we can go and play the range. Top of the range, we are looking for the sells. So our long-term sells are getting very, very close. That could happen any moment. Today, tomorrow, Friday, Monday. Okay, keep an eye on that. It could happen any moment, and I want to remind you where it all comes from. 1, 2, 3, 1, 2, 3, and that's all give us classical two ways. So get ready, guys. Our short-term longs that we were accepting after the second false break, they keep going. So for all those of you who are intraday, that's the pairs to look for buys. The one that you have the synchronization between cycles, right? The triple or special on the 4 hour, the two false breaks, that's the ones to look for the corrections. Not pairs like pound yen when you don't have the cycles confirmed and approved. And we are coming closer to the sell area and look for the sells. Okay, the next one, OZQ we discussed and discussed. All right, silver. Going to the commodities. Now, silver is still dancing on the broken area right here. 4 hour chart forming a bullish hidden divergence right here. It looks like it's going to turn to possible continuing divergence. So here we go. Now, because of the 4 hour chart, 2 candles rule, which was not respected, that's the last 2 candle, was not respected. It's one straight move. There is a bullish hidden divergence, yes. The daily, weekly, we still expect rallies, yes. We take the last trend line, which is this, and we apply the double confirmation rule. So we got a breakout, we got the pullback. Once it happened, this is the okay to go with the buys. Double confirmation. Why? Because the 4 hour chart, one straight move, no 2 candles. So we have to play safer. Because we are going with the expectations from daily and the weekly, according to the cycles, we agree to go with this combination. But in order to play that safer, 2 candles rule. Very simple. New Zealandian Canadian. Remember this one, guys? We are not bearish, we are not bullish as long as that last trend line at least not broken. And right now, Congratulations to the sellers and the holders. We are right next to the 50% correction of the special cycle on a daily. Remember what we always say, right? Patience pays off. It does. New Zealand cut slowly but steadily, approaching and reaching its target. It is yet bearish. Once it breaks, and only once it breaks, it will be acceptable for short-term retraces. As long as it didn't happen, we are not allowed to look for retraces. It's too easy to gamble here on double top. It's too easy to gamble on a hammer. It's too easy to go to 1-hour chart, find divergences, and try to gamble. So that now it's time to buy. Now it's time to buy. The answer is no, it's not. Weekly and daily are ultra bearish. Do not gamble, and that's the proofs when gamble can easily fail, right? When you try to gamble on the edge, most of the times you will fail because you have no money with you from the higher time frames. You get the breakout of the trend line, the 4-hour chart trend line, then and only then we can start looking for setups. It could be two waves retrace, bullish hidden divergence, or any kind of strategy you applied. Okay, but only after we get the confirmation. Merrill, Aussie franc, no problem. Let's take a look on the Aussie franc. Aussie franc is ranging, doing nothing. I don't see anything here. We have no bullish hidden divergence yet on the daily chart. We have no two waves on the 4-hour chart. One straight leg down only yet. So it's definitely acceptable to make lows, as we explained yesterday. So on the short term, still look to sell rallies is a good plan from my point of view. For long term, I would still be looking to buy these buys. Same with the CAD franc, basically. Sorry, this one. Same with the CAD franc. As long as we are holding this range, rallies can still provide a second leg. 1, 2. So short-term retraces are definitely possible, and long-term we are for buys. Now note, the correction could be in two waves, or can get stuck in a range. It's still a corrective cycle. Okay, Marlene, Aussie dollar unchanged. We were bearish and still are bearish from Monday, right? Nothing changed there. Same with the New Zealand dollar. We are going, and we have the targets here, 0.75, 0.73. We discussed about it on Monday. Nothing changed. Okay? No signs against us, nowhere. Yet, no false breaks, no convergences, no trend and breakouts, nothing. It was and remains bearish. Same with the New Zealand dollar accordingly. Right? Euro yen 1-hour chart. Why? For the buys. Yes, you have a good. Well, no, you don't have any good here. No divergence for you here. There is a bullish hidden one which you can go with. Kind of tricky. 4-hour is still stuck in two candles. It's bullish enough. Yes, small risk. It could be a good take. Small risk. It could be a good take. The problem is that your bullish hidden divergence formed here. No two waves, one wave, and not here. This where your hidden divergence normally would be created. Kind of tricky. Definitely acceptable. What I would be doing in that situation, I'm not going to long it because I'm looking for long-term sells because of the weekly and daily expectations. But in that case, even on lower time frame, right? Breakout, lower time frame, you got it. Why not second? Because you don't have two waves. That's why. If it's double bottom, Double bottom is only ending situation, not continuing situation. It's double bottom. Then it has to be a regular or continuing divergence here. First law is a law for a possible continuation. Then it can turn to be from hidden, it could turn to be continuing, but it didn't. Right? Think about it logically. Hidden is for a trend continuation. So it should happen on your first law. Move, correction, trend continuation. If this move makes a double bottom, then this bullish hidden divergence, this bullish hidden divergence could turn to be a continuing later on, right? But the hidden has to be here, not here. Here it has to, if it's double bottom, it has to be a regular or continuing divergence, because double bottom is ending of the correction of the trend, call it whatever, right? That's the idea. Since we don't, I totally agree with the direction that we have to go higher, but double confirmation. Breakout, 1, 2, breakout. Happened, great. Not happened, it could easily do this one for you. Too easy. Okay, the only thing that currently is good for the buys currently is the fact that the last 4-hour chart 2 candles hold. That's a pretty positive sign. That's a pretty positive sign. So with a small risk, of course, because we are still against the daily and the weekly, right? That could be taken, but I explained you the conditions. Guys, I want to pay attention to the indices. The indices are moving and are moving beautifully. Now, the DAX, as we planned yesterday, so far, so good. Now we have kind of a triple here on the intraday. We want to see 1, 2 or bearish hidden, and this would be our go call. Okay, so keep an eye on that. It's happening. Let's wait for the second confirmation that we want to get, and we are good to go. Nasdaq is paying beautifully since yesterday. Let me just find it. Where is Nasdaq? Here. No. Where is my Nasdaq? Here. Okay, we got a breakout and we are beautifully for the continuation. Now, again, same story. Retraces and sells. This is our invalidation, right? Of course, for those of you who are not in. For those of you who are in with the breakout, then this is the triple double, right? 1, 2, 3, 1, 2, bearish divergence. That's the breakout. That's the classical triple double. Now you get yourself a beautiful 1 to 2 risk reward. So this is a great place to cash out at least partial. Those who are not in, 2 waves retrace is still the same idea, or bearish hidden divergence on the go with a possible trend to go. Of course, our invalidation is right here. Okay, that's for the Nasdaq, which looks wonderful from my point of view. And well, that's for the indices and a bit of the cryptos. The healthy correction we were looking for might look like a beginning. It doesn't change our long-term plan, of course. This was the triple special. You name it as you would like. We would like to see 1, 2 and continuation. I'm showing Ethereum, but it's basically everywhere. It's same with the Litecoin. The Ripple, it was a bit shaking one, right? But the idea remains the same. This is the push. We would like to see 1, 2, despite the spike, of course. 1, 2 breakout. So the idea was and remains the same. Every 2 waves retraces, get yourself the watch for the breakout. This is the idea. And again, I'm showing this, but they are all the same. All of them are basically creating the same movement exactly. 1, 2, 3. We require 1, 2, boom. Okay, so watch for that, wait for that. It paid amazingly on the last week. This rally was amazing for all of them. IOTA duplicated the price almost. Actually duplicated more than duplication. Sentiment had an amazing run for more than duplication. So wait for that. Go with that. Momentum breakouts. That's exactly what is required. 1, 2 breakout. That's the chance. That's the chance to get paid. And don't rush to get in, because so far they are moving technically. So far. That could be a good hint for the future, but still, wait for that. Don't force it. It's very easy to say, oh, game over, right? Same with the Monero, which is currently bouncing from this wedge. Right? Beautiful, special, triple cycle, you name it as you would like. So again, 1, 2 would be very welcome scenario for a continuation. Okay, so yes, short-term corrections are acceptable for the cryptos. Long-term, we are still after 2 waves retraces for buys. All right, that's all, guys. That's all for today. Tomorrow, quick update, I will not be around, so there will be no live room with me. Jordan will pass on his live room all the updates, upgrades, and everything that the market will create for us, if will create for us. Last thing, guys, for those of you who are trading commodities, keep an eye on sugar. Sugar is approaching to amazing level, and from my point of view, the 10 down to 9 is an amazing place to start looking for the next portion of buys. Okay, this is the place. Now here it's a bit lower, it's around 8 even, and this is the place. Now we have here the 61.8, and we have here the 261.8. Look at that place we are approaching. You see that? This is a monster. That's what we call magnet zone. The divergence is getting there and screaming. That's going to be a very interesting place. For those of you who are for commodities and invest, like myself, this is the place for us to start looking for great opportunity. Just quick tip, and that's all. On most of the brokers, sugar is traded as contracts, which means quarterly. That means profit or not profit. Once the contract expiry comes, the position is closed. Check if you have the ability with your broker. Ava is rolling over. Other brokers, some of the other brokers also. Check with the broker you use if you have the rollover. Rollover means they continue your position. They just deduct or add the difference from or to your account according to the difference between the contracts. What the new contract would be compared to the previous contract. That's what we call rollover. Most of the times we pay for that because it's a costly thing. The contract changes. Sometimes we gain from that. So keep an eye on that for all those of you who do want to be involved in this investment. From my point of view, this is one of the most interesting opportunities. It could be done also as a future. It could be done also as a several years option, like buying some calls for that or any other possibilities that you know. But for those who are trading CFDs, for example, ideas, pay attention that most brokers do not roll over. So you have to be responsible and to check it, right, for yourself, not to be surprised if the trade suddenly getting close. So that's all for today, guys. I will see you in the Telegram groups, of course. I wish you a wonderful week continuation. Thank you very much for being here, and enjoy your evening, day, and very soon a weekend to come. Thank you for being here. Wonderful day to everyone. Bye for now, guys.